Gold's rally, it's simple. It's a weak US dollar, right? It's the worst year since 1973. Inflation is still happening. CPI is higher than most central banks claim they want it to be at. But the central banks themselves are hoarding gold, in a way price insensitive, because it's a strategic allocation. Bitcoin's lag, as James quite rightly points out, is not actually something to worry about. And yes, the diversification is true, but in this instance, it's actually very, very bullish for Bitcoin and is more than likely a symptom of the shenanigans that the central bank is able to play with on the repo markets, etc., that I touched on before. So what the hell's going on? I think it's very bullish, like extraordinarily so. Like the year end, we're looking at some big numbers coming in my opinion. There are some risks, of course, and in this case, like the risks I would point out as more, why would you own US treasuries? Well, the sanctions that Russia got hit with were a very, very obvious shot across the bows globally a number of years ago, where it's like, if you own our shit as a part of your portfolio, don't expect to keep it long term if you piss us off. And although the Russians have been actively reducing their position of US counterparty assets, they still had a bunch of money wrapped up, right? So the US froze approximately 5 billion in Russian central bank assets after the sanctions. So that was in 2022. But the figure is a little light because the global freeze that happened on Russian assets is more like 300 billion, of which 67 billion was in US dollar denominated securities held abroad, like in Europe, for example. So, 300 billion. Ooh, I don't want 300 billion not on my balance sheet, right? So people are thinking, okay, well, the counterparty risk of owning government debt, which was previously like highly liquid and considered the risk-free rate of return, is that still the case? But what other choice do you have, right? Well, gold is the obvious one, but perhaps level 941 is absolutely bang on. And really, the central banks of the Western world are leaning towards Bitcoin. Like, could that be true? I mean, it would be insanely bullish for Bitcoin if the case. But it made me think about the Bitcoin standard and the historical context of the battle between gold and silver, and the likes of India and China that were slow to adopt the gold standard, and the disbenefit to their civilization and their economics as a result of doing that. Are we now at that same turning point? Like, if a central bank actively pursues Bitcoin instead of gold, and therefore they choose the asset that is superior for transferring value across not just time, but also space, how big a margin might they improve themselves by or win by in the future? Now, as you know, I'm a big advocate for Bitcoin. I think it benefits not just nation states and central banks. In some ways, I think it actually obsoletes a central bank, but the commercial banking industry will absolutely remain because there'll still be all sorts of financial products that can be built on top of Bitcoin, the base layer. But it also benefits the individual, right? It enables you to take self-custody of your stuff. It's very difficult to steal a seed phrase from someone. Like, why would you shoot and kill someone dead if you can't get their seed phrase off them and then you can't get their money? Whereas you could just shoot them and take their gold, right? There is a very, very clear attack vector that Bitcoin has improved upon when it comes to the proliferation of sound money of Bitcoin versus gold. So what am I watching? Well, of course I'm watching M2. Of course I'm watching gold. Of course I'm looking at Bitcoin's chopsolidation and thinking, fuck, when's this blow off top going to happen? Now, I said this recently, August, September, they're always quiet months, right? But gold's ripped since the middle of August. Why has Bitcoin not done that? Well, I think that's yet to come. And that's kind of the point of this entire episode, right? Is yes, it's true they suppressed the gold price. Yes, it's true they're actually buying gold themselves. Yes, it's true that there's been a divergence between gold, Bitcoin, and the M2. But we're not looking at the deep enough data. And Michael Howell is incredible for that with his global liquidity index. So what did we learn? Gold is the canary in the inflationary coal mine. People are running to the traditional safe haven asset. It might well be the case that gold actually outpaces the stock market. Could we see some kind of recreation of the 1970s stagflation? Maybe. If that was the case, do you want to be in the stock market or would you prefer to own hard assets? And gold is signaling cracks in the fiat system. It's like we can see that inflation isn't under control. we can see that you are buying gold yourselves. That's such an obvious thing. It's like, oh, yeah, buy my currency, but I'm buying gold. It's like, okay, that's sus. I don't believe you, right? I don't believe that you actually believe in your own currency. But it's a global shift. And so easing rates in an inflationary environment with all-time highs in the stock market and gold, well, more than anything else, this is a story about the disintegration of the denominator of what most people price their assets in. Remember that. A Roman legionnaire's beautiful outfit in Rome costs you the same amount in gold as a Savile Row suit today. Okay? This is a crucial learning that I didn't really come across for a long time. And because of the lens of sound money, you can then start to think about the difference between saving and investing. By just owning gold or just owning Bitcoin, you can save because that's a form of money that has the attribute of store of value. You don't take risk. As soon as you move your Bitcoin out of self-custody or you don't have physical custody of your gold, you adopt counterparty risk. So every equity that you own, every bond that you own, every physical piece of real estate that you own, every classic car, it all carries counterparty risk, in my opinion, over and above Bitcoin in self-custody. But it could well be the case that these powers that be in the central banking world are cottoning on to the power of Bitcoin, as per what we've touched on today, and the ability for that to basically leapfrog this power play of the BRICS nations reaccumulating gold.